45 years, 0 name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
Welcome. Thank you for joining us tonight for our presentation on effortless financing, high leverage, and no red tape. My name's Stephanie Miller, Private Lending Manager here at Marshall Reddick. I have my contact information listed on the screen. A lot of my day is spent on the phone with new and old borrowers alike, and I would love the opportunity to speak with everyone on the call tonight. So please take note of my contact information. Would love to hear from you and see how we can put together a deal and you can utilize Marshall Reddick's financing.
Good evening, everyone. My name is Levi Mendoza. I work with Stephanie day in and day out. I'm an investment analyst on the team. It's my job to take people's deals to the finish line. So if you want to note my contact information, be more than happy to help you do the same. Looking forward to a great webinar today. We have a lot of content and a lot of details to go over as far as private lending and how I help borrowers and how I make their deals happen.
Before we dive into tonight's content, I wanted to take a couple of minutes to go over exactly what Marshall Reddick does. So Marshall Reddick is a one-stop real estate shop. We offer 4 different services. The first service is brokerage. So we help people buy and sell both primary and investment properties. Our second service is property management, where we help people manage the property in which they purchase for investment use. Our third service is private lending, which we'll specifically go over tonight. And our fourth service is investment funds. So we help people invest in investment funds as well as trusteed mortgages. I have all of our locations listed on the map. So these are all markets in which we have a brick and mortar office and can help both on brokerage and property management side of things. We can also help with private lending in these markets, but additionally, we can also lend in additional states. So here's a map of all of the different states that we lend in. If there is a state that is not listed on this map, please give me a call. We're always interested in expanding our presence and expanding our markets. And I'd be more than happy to speak with you to see the level of deals that you're doing, your experience level, and to see if we can enter into a new market.
Sweet, so we got a packed agenda today. Of course, we're going to go over our private financing offerings. That's each of our loan programs. That's going to be what the process looks like, just a comprehensive overview. We're going to go over defining what private financing is versus traditional financing, how Marshall Reddick's approach is unique. It's the reason why we're able to do deals so quickly. Within those loan programs, we're going to break up each of their use cases, what will be most appropriate for your scenario and your plans, what the lending process looks like from application all the way to funding, even all the way through to construction. We do a lot of construction and renovation loans, so draw processes are going to be an element to this presentation. We'll show you some of our fun and exciting recently funded deals, go over some of your most popular questions, and of course, what would a good webinar be without a discount code at the end? So stay through to the end, and you're going to have a really great opportunity to save money working with us.
So right out of the gates, a few things to know about Marshall Reddick's private financing is we are non-owner occupied. So we're a non-owner occupied lender. We just don't have the licensing to do owner occupied loans. However, I have a great conventional lender that I can refer you to if you need anything as it relates to owner occupied lending. The next thing is residential real estate only. So we typically do 1 to 4 units. We can explore small apartment buildings. So, 10, 15, 20 units. We actually have a 24 unit apartment building we potentially are taking down at the moment. However, nothing when it relates to commercial. So we can't help when it comes to hotels and strip malls and gas stations and things like that. So residential purpose only. Our financing is good for purchasing, refinancing, and cash out refinancing. So whether you're purchasing a new property, whether it's a rate and term refinance and you're simply looking for a longer term option to replace your short-term debt, or you're looking for a lower interest rate, or whatever the case might be, we can help with rate and term refinance as well. We can also do cash out refinance. So if you have any properties where you have a boatload of equity and want to tap into the equity to maybe purchase another property or do something different, then we can help you tap into your equity as well. We also have a non-recourse option for retirement accounts. This is super cool because a lot of people don't realize that they can take a loan in their retirement account to purchase real estate. And so if you have a self-directed retirement account, we can help you purchase 2 or 3 properties as opposed to just purchasing one property like you would have to do if you were using all cash. So how is Marshall Reddick's private financing different than traditional financing? And taking that a step further, how is Marshall Reddick's private financing different from maybe other traditional private lenders? So first thing is we don't sell our loans. So traditional lenders and other private lenders a lot of times sell their loans. And so that's important because not only does the lender, when they're selling their loans, have to adhere to their own guidelines, but they have to also adhere to someone else's guidelines, right? So if they're selling their loan to an institutionalized lender, they also have to check all of the boxes for the institutionalized lender. At Marshall Reddick, since we don't sell our loans and we're a balance sheet lender, we can kind of make our own guidelines, right? It doesn't mean we have loosey-goosey guidelines, but we do have guidelines that are, there to protect us as the lender. However, if something makes sense and it just doesn't check one of our boxes, we can a lot of times still make the deal work because, again, we're not selling our loans and having to adhere to someone else's guidelines. We also don't require a hard credit pull. So other traditional lenders and a lot of other private lenders do require a hard credit pull, and they also report to your credit. Here at Marshall Reddick, we do not check, at least a hard credit pull, and we do not report to credit. So, if you're going to get another loan, it's not like our loan is reporting to your credit and therefore tapping into your debt to income ratio requirement. We also don't require a personal guarantee. Again, other traditional lenders and a lot of other private lenders will require a personal guarantee. A traditional lender typically will only lend to an individual, and other private lenders will typically only lend to an LLC or a corporation or some kind of entity, but they still need a personal guarantee. However, at Marshall Reddick, we can lend to both individuals, we can lend to entities, and we do not need a personal guarantee when lending to an entity. Really, just the entity is the one guaranteeing the loan, not necessarily an individual person. We don't look at personal assets or financial statements. We're not looking at tax returns or calculating debt to income ratio or anything of that sort like traditional lenders are. And we also don't require substantial documentation. So traditional lenders, a lot of other private lenders, have multiple rounds of documentation. It's like every time you provide the documentation they requested, they're requesting more information and more information. Here at Marshall Reddick, we take a very common sense, no doc approach. And so our documentation requirement is extremely low.
Very cool. So our no red tape approach, we've alluded to this. Stephanie just kind of did herself. Our loans are literally no doc loans. So what does that mean? If you've ever gone through a conventional lender or a lot of other lenders, even private ones, they somewhat throw the book at you. And I say throw the book as in that 180-page thick stack of papers that comes with borrowing money from an institutionalized lender. That's not Marshall Reddick. In fact, we've had people in our office that come to sign their docs and they're surprised that they don't exceed 30 pages. So a no doc loan does not mean necessarily that we're not underwriting or evaluating everything that we want that will be important to evaluate when a loan comes through our doors. We have our own criteria that we look at, and it usually has to do with the property. As a collateral-based lender, what's most important to us is the property itself, and that's truly what's qualifying here. Therefore, we don't really have a hard credit pull. We're not looking at your DTI, your income verifications. We're not looking at tax returns. We don't even do an appraisal for our fix and flip and new construction loans. So just know that you're not going to have a lot of drag in your lending process here. It's very fast because we've gotten rid of all those roadblocks that encumber so many funding processes. And it's what's made our products extremely attractive to many, and we hope to you too. So what's relevant then in collateral-based lending? It really just boils down to, is the loan to value great? Are we seeing a property that has great potential based on the renovation plan that you've set out? Do we like its location? Is it in a market we're comfortable with? Does the borrower have a lot of equity in that property, or do they plan to? Is their background matching up with what we like to see? Most everyone that borrows with us has quite a steeped experience in their respective market, and even with a certain property type. So the background of the borrower, their experience, even their reputation is something that we're very much looking into. We make phone calls, we're a relationship lender. So a lot of the time we don't really get a lot of borrowers that aren't a referral, and referrals are like gold to us for that matter. And just know that it's a common sense approach that we take for our lending. We make a loan that we personally with our own money would make. That's the only thing that comes to the door and the only thing that goes out into our lending market. So no red tape approach makes your life a heck of a lot easier. So those guidelines. So we have our own guidelines. This is a program built by investors. It's for investors. So everyone at Marshall Reddick here has invested in hundreds of properties. They flipped properties. They own rental properties. So we had our own idea of what type of lending program will make sense for the average and the above average investor out there. We make a real big point to be extremely transparent and reliable because we don't want to waste your time. We're not going to be that lender that strings you along for 1, 2, 3 weeks while your contract's looking to expire. We want to make sure that you know right away, hey, we're interested in this deal and we can make it happen in these parameters, or hey, this deal is probably not going to work. And we'll tell you that straight up, and we won't be changing any terms on you. Those terms that we discuss within those first 1 to 3 days of reviewing your property, that's exactly those terms that you're going to sign when you put your name on the loan documents and we go to funding. A 7 to 10 day closing is an average process for us. Sometimes we've done it a lot quicker, sometimes a little more time's needed, but this is average. 7 to 10 day is it's the time range that I live in my daily work. So be excited about it.
We offer loan programs for all different kind of niche borrowers. So we touched on this briefly. We can lend to individuals, we can lend to entities. When we're lending to entities, no personal guarantee is required. We can also lend to trusts. So family trusts are something that we lend to often. A super big one is we lend to foreign nationals. So you do not have to be a U.S. citizen in order to borrow from us. There's one of two things that you do have to meet, however. So if you're a foreign national, you either have to have an ITIN number. So that stands for an international tax identification number. That's if you're borrowing from us personally. Alternatively, if you have a LLC or a corporation or some kind of entity that's registered in the United States and has therefore a U.S. tax identification number, then we can also lend to you via that vehicle as well. So as long as you have some kind of U.S. tax identification number, whether that's individually or through an entity, we can help you out. We also have the non-recourse option for retirement accounts. So whether you have a self-directed IRA LLC, whether you have a self-directed IRA at the custodian level, whether that's with Equity Trust or Forge Trust or some of the other custodians out there, we can also help you purchase property in that entity as well. So what kind of loan programs does Marshall Reddick offer? We offer several programs, the first being renovation. So this is great for fix and flippers and BRRRR investors. BRRRR is a buzzword nowadays that stands for buy, renovate, rent, refinance, repeat. And so we have a lot of people utilizing our fix and flip program to BRRRR, where they utilize our loan on the short-term side of things to get the property purchased and stabilized, and then they'll refinance with another lender or with Marshall Reddick's DSCR product in order to hold on to that property long term. We also offer new construction. So this is ground up construction. This is great for the small mom and pop builder. We will help you go vertical. We'll dive into these programs in greater detail in a little bit. We offer also bridge. So this is great for the wholesaler Wholesaler is also a buzzword nowadays. If you have a property that you're just getting a slam dunk deal on, maybe you're buying it from probate or from a wholesaler, and you can make a good rip on the profit if you just simply clean it out and list it right back on the market. This is a great program for you. A lot of people also use our bridge program who are waiting for a conventional loan, right? So maybe you haven't filed your 2024 tax return yet, and your conventional loan officer says, hey, we have to get those tax returns in before we can qualify you. Fine, use us for a bridge loan. We can help you purchase a property, and then you can utilize your conventional financing once you get your ducks in a row. We also have a rental program for the DSCR investor, right? So if you're looking to hold on to property long-term, we can also help you there. Any of our loan programs can be found in real time on our website. So you can either go to marshallreddick.com/loan programs. Alternatively, if you go to marshallreddick.com and hover over borrow and click loan programs, it'll take you to the same screen. This is a benefit in working with Marshall Reddick. Something that we believe highly in is transparency. A lot of other lenders are not going to be transparent when it comes to their terms. You're not going to be able to go to the website and see all of the different offerings they have. With Marshall Reddick, you are able to see that whenever programs change, which they don't change often, but when they do, you can see everything listed on our website in real time.
Yeah, so this is actually extracted directly from the website. And this is just a quick overview of those loans. These are our renovation loans. 80% of the business I do is renovation loans. So that'll be our bread and butter product. Very quickly and easily, there is a link right below those terms that you see on the website that takes you to this page. It's more involved, more details, but as Stephanie mentioned, we like to be transparent. So we put it right out there for you. So I'm happy to walk you through the highlights of this sheet. It's of course available to you, but just know when you get the renovation loan sheet, just know every loan for Renovate is 12 months long. So that's the first thing to keep in mind. While 12 months is a standard term, we do offer 6-month terms for even a lower origination fee. So that's something to consider. And just know too, extensions are also available for all of these loans. Sometimes plans don't go as quickly as they'd like. So we just like to let people know, hey, if 12 months isn't enough, we're more than happy to look at 3 and 6 and so forth. So if we're looking at the rates here, our rates bottom out at 8.75% and they go all the way up to 12. The APR here, if you guys are familiar with annual percentage rate, you're not going to be charged 15, 16, whatever percent on a monthly basis. This is just taking your loan fees, seeing the bottom right-hand side of your screen and stretching them out across that 12-month period. So this is like the total cost of capital, how much that money is going to cost you to borrow for that 12-month period. And know that these are IO or interest-only loans, so you're not going to be burdened with any principal payments throughout the life of these loans. It's just interest-only payments with a balloon payment at the end. So you may have noticed already, but these loan-to-values all increase alongside in lockstep with the interest rates. So basically, the more money you bring to the table, the lower the interest that you pay, lowest being in program 1 there at the top, and the highest leverage being program 4 at the bottom. Higher leverage is quite popular with our borrowers. It usually seems to be the desire. So program 3 and 4, I'd say I get the most inquiries about, but not to say that people don't want to bring a lot of money and put it into their deal. And we're happy to get those deals done just as easily. So one thing to bear in mind, it's noted that acquisition funds and renovation funds are included within the total loan amount, but that amount cannot exceed 70% of the after renovation value. That's our benchmark value cap for all programs. So as long as the deal makes sense and your renovation funds plus your acquisition funds come to under that 70%, that's what I like to see when we're looking at our underwriting team. So moving on, just know minimum down payments do apply. So even if you bring me that $50,000 deal somewhere in the Midwest, that there will be a minimum down payment applicable. And again, corresponds with each program. So the minimum down payment for that 875 rate, for instance, is $25,000, and that goes down to $20,000 and $15,000 and $10,000 for each successive program. So 2, 3, and 4, $20,000, $15,000, and $10,000. So as mentioned before, I like doing 7 to 10 day closes. I do a lot of 7 to 10 day closes. The lack of an appraisal requirement is the real reason why we can do it so fast. Rarely will request a appraisal if it's absolutely necessary. That happens probably less than 2% of the time on most of my deals.
Going in now to the new construction loans. Again, if you go to our website, marshallreddick.com, hover over borrow, go to loan programs. If you want to download the rate sheet for the new construction loans, this is the screen that you'll populate into. So our new construction loans offer 2 different products. They're both 12-month terms. However, extensions are available. So just like Levi mentioned in the fix and flip program, extensions are available. They're also available in the new construction program, assuming that, the loan is in good standing and that type of thing. We do a lot of times get into extensions when it comes to new construction. Sometimes the city or the county is dragging their feet on permits or inspections or whatever the case might be. However, as long as your project's progressed and, like I said, your loan is in good standing, we'll have no issues giving you an extension if need be. Our interest rate ranges anywhere from 8.95 to 11.95%. The monthly payments are, made interest only, so you're not amortizing anything. You're just paying interest on a monthly basis, and then at the end of the loan, your principal will be due back. And our 2 programs range in terms of the percentage of construction that we're financing. So if you want to borrow 85% or up to 85% of your construction budget, fine, we can do that at 8.95%. If you want to borrow 100% of your construction cost and pay a little bit more interest, we can also do that as well. However, this is all subject to 70% of the after construction value. So same thing in the fix and flip program, we'll go up to 70% of the after renovation value. Same thing with the new construction, 70% of the after construction value. If 70% of the after construction value gets you 100% of your construction costs, great. We're more than happy to make that loan, but 70% is the second hurdle, I guess, you have to jump through. All of our construction funds are released in a reimbursement style fashion. Typically, the draw schedule we utilize for new construction loans is as follows. However, if you need additional draws, you're more than welcome to request those as long as they're reasonable. We're going to be reasonable with you, and we don't have to necessarily adhere to this draw schedule, but this is what works mostly for new construction builders. So the first would typically be released at slab pour. The second would be released at trusses and framing. The third would be released at rough-ins. The fourth would be released at drywall, and the fifth at completion. Like I said, typically that's the draw schedule that works, but if you need additional draws in there, we can likely accommodate. For the new construction program, we take a little bit longer to close, 17 to 21 days. We can close quicker than this if needed, but there's a little bit more that goes into a new construction loan, so the more time we have, the better.
Very well. So bridge loans. I like my bridge loans. Bridge loans are serving a great utility to a lot of our investors right now, especially with the interest rate climate that we're in. We have 3 offerings and one's brand new, so I'm really excited to share it. If you're familiar with bridge loans, then you'll know they're similar to a renovation loan, only this is a more stable property, one that doesn't require improvement. A bridge loan is going to be used, like Stephanie's already mentioned, say someone just has a smoking deal and they don't want to do anything to the property. They just want to flip it right back on market and get rid of that thing for a profit. Or they'll use it for temporary financing. They're waiting for a new loan, or maybe they're waiting for rates to calm down and they don't want to commit to a 30-year. This is a fantastic option for you. So our bridge products, again, will also take 14 to 17 days to close because there's a little bit more involved. Because it's a stable property, we will be ordering an appraisal here. And that appraisal, it also notes that it's waived for below 50% LTV, which would be great, but subject to appraisal timing, this is going to be an appraised property. So 14 to 17 days is more the standard here. We have 12, 36, and 60-month terms. The 60-month is the newest within our program. The rates top out at 9.95 for the shortest term, bottom out at 7.95 for the 5-year term, and 8.95 for the 3-year term. Also interest-only payments, and loan to value ticks down with the length of the term. So a 1-year term, 80% max. 3-year, 70% max. 5-year, 60% is the max. Now, regarding the closing, so once we have that appraisal, kind of works just like any other loan. We go into our market, we find the funds, and then we go ahead and fund your deal, take it to the finish line. One thing that'll very much play a role in your total loan amount and our comfortability with the deal is your DSCR ratio. Luckily, we don't have a very super restrictive DSCR ratio for something like a bridge loan. It's a 1-to-1 ratio, so that just means your PITI payment needs to be equal to the market rent of the property. At the very most. So you're in a good spot, very favorable DSCR requirement hurdle to get over. A lot of our loans, such as the renovations, will have a 3-month interest guarantee. Bridge loans are special. The 12-month has no interest guarantee. 1 year has the 36-month has a 1-year interest guarantee, and the 5-year will have a 2-year interest guarantee.
So now that we've gone over the different programs that we offer, what happens when you're looking at a deal or you have a viable deal and you want to get started? A lot of times I'll get asked if we offer pre-approval letters, and the answer is yes, absolutely, no problem. If you need a pre-approval letter, just ask. In order for us to provide a pre-approval letter, we need a few things. First being a bank statement, right? Again, I mentioned earlier that we're not necessarily looking at your bank statement to source withdrawals or deposits or anything like that. We're just making sure that you have necessary funds to actually do the deal. Next will be loan type, right? Are you looking to do this as a fix and flip? Are you looking to do this as a bridge, DSCR, whatever it might be? And then we also want to gather the subject property address so that I can, Google it and make sure it's something that we would actually lend against, as well as your offer price. Mm-hmm. The reason why we want the subject property and the offer price is because we're going to utilize that information and put it into a professional looking pre-approval letter that you can provide to the listing agent and the seller. Mm-hmm. And so, what's important about us providing this is it's going to show that you're approved for whatever offer you're putting in. So in this case, I'm showing you're offering 625, you're approved for 625. It doesn't mean that we won't go up to 650 or 675 or whatever the number may be if you're willing to pay more for the property. We just don't want to show the seller that you're approved for more, because then they're more inclined to negotiate with you. So we're going to utilize both the property address so that the seller and listing agent can see that you're approved for that actual property. And we're also going to use the number that you're offering. If you get into some kind of negotiation and need us to bump up the loan amount, no problem. We can produce this in about 30 seconds. So it's super quick on our end. And, we're quick. We're on our, email and cell phones all day. So if you need us to revise this in quick time, no issues. I also am going to list my contact information on the pre-approval letter. And what's important here is we encourage the listing agent and or the seller to give us a call, right? Mm-hmm. I want to talk to the seller or the listing agent and tell them, yep, I have talked to Levi. We've done tons of deals with Levi. I've reviewed his deal. We're going to have no issues closing. We can close, in 7 days. We don't require an appraisal. And we're just going to make the seller feel warm and bubbly about accepting your offer and our ability to come through as your lender and close the deal on time.
Sounds good. Alrighty, y'all. So just like being expressive about our loan programs and making those easy to find, the loan application, not only is it also easy to find, it's right on top, but it's going to be just as easy to parse through. So when you're ready to borrow money and you say that you have an offer accepted, our letter works, and now you're ready to go get your boots on the ground, then we go to our loan application. Now, I encourage people to do this by themselves. I also encourage them to call someone like me or Stephanie to walk them through it. Just know that when you go to this page, on the loan application page, you'll be faced with private financing and then conventional financing. Conventional financing connects you to a preferred conventional lender that we've worked with on thousands of deals. Private financing puts you into the portal that will help you start a private loan application internally with Marshall Reddick. So once you get there, it's a short questionnaire that helps fill in a lot of the information on the full questionnaire, asking about what type of loan you're looking for, your reason for the funds. And then this is the actual loan application itself. It's really simple, has a couple of categories. It'll have all your loan programs that you may be interested in. It'll also ask you questions about the property itself, your opinion about the property currently, if it's a construction or renovation, what you think it's going to be worth at some later point in time. And then, of course, borrower questions that are just important to getting to know you, things like your socials, your ITINs, bank account information, and the like. So it's a really simple, very easy loan application. Again, you could lead this yourself pretty fairly, but I really enjoy doing this with people over the phone. So if you ever need that help and you want to kind of further the relationship by going over this deal loan application, please feel free to give me a call. It's one of my favorite parts of the job is getting to know people and getting to know their deal.
So once you input a loan application, what happens next? Well, we get the underwriting process started. So once a loan application comes in the door, I get notified. I'm going to reach out to you to confirm that we received the loan application, and I'm also going to connect you with an investment analyst. Something that is cool about working with Marshall Reddick is that we don't pass you along from person to person or processor to processor. We believe in getting you into a close-knit team that you're going to have not only for the entirety of your current deal, but every deal moving forward. So I'm going to assign you to an investment analyst who's going to be the liaison between underwriting and you as the borrower. And they're going to get you through not only this deal, but every deal going forward. You're going to build a relationship with them. They're going to build a relationship with you, and you'll know who to call whenever you have a new deal or an issue or a question or whatever it might be. So the investment analyst is going to gather documentation, right? Here's our documentation list. Super simple. We're going to need the purchase contract. We're going to need the scope of work. We want to understand exactly the scope of the renovation or the construction that you're doing to the property. We want photos. We want to understand the current state of the property. And then we also want a couple of your best comps, right? What comps are you looking at and you're using to establish either your after renovation value or your after construction value? We want to submit these to underwriting so that they can look at the same exact comps that you're looking at, and they can, use that in their valuation to hopefully get you right on the money in terms of the after renovation value. We'll also need your bank statement, your entity documents if you are purchasing through an entity, as well as your driver's license. If you don't have a driver's license, no problem. If you're a foreign national and only have a passport can work in place of the driver's license. And then we'll also need your insurance agent contact information, right? Because we want to reach out to them. We want to understand what your quote's going to look like. We want to understand, the process in binding the policy, and we want to really step in and help you out in terms of binding that coverage. Once we've gathered all of the documentation, we'll pull comps, right? So we want to value the property. What is its current market value in its current state? What is its after renovation value once you, do your scope of work to the project? Once we have determined both of the values, current market value and after renovation value, we're going to structure the loan within our guidelines and issue you loan terms. Once you look at the loan terms, you're more than welcome to ask any questions that you have. We're happy to answer them. But ultimately, once you give us the green light and say, yep, I approve these terms, I'm ready to go, then we'll proceed to lock up capital and move to closing. We'll reach out to your escrow agent and, give them our title request. We will pull title work and we'll draft loan documents. And we really just spearhead the entire process when it comes to escrow and insurance to try to take that off of your plate so that you can focus on, getting your contractors in line and doing whatever else you need to do in order to, be in a position to purchase the property and go guns blazing.
Mm-hmm. Very cool. So you've funded your deal. You're in decent shape now. You're ready to give your contractor the high sign to, hey, start digging into the dirt and let's go vertical, or let's start tearing down the walls in this, this ugly property and turn it into something new. Great. So funds control is the element that we call the draw process here at Marshall Reddick. So just like you're with a investment analyst assigned to every deal, every investment analyst is going to have a subsequent funds control analyst. And the funds control analyst role is to divvy out what your scope of work says into what we call a draw schedule. They will forward to you a questionnaire that you'll fill that'll say, it'll be your distillation of what you see as far as the renovation process. So that's like phase 1, 2, 3, 4. You'll also input your banking information. And that will be kind of our go-to when we're reviewing the work and reviewing the draw request So excuse me. So the lender's expectation is correct insofar as what you're going to be doing at the construction site. So once that draw schedule is sent, it'll be approved by that funds control analyst, and you can go ahead and get started doing your work. Big points here. So no formal draw inspections needed. We don't send any type of third-party agency to go look at the work that you've done and write it up for us as far as approved or not. City and county inspections are special because those are municipally mandated. However, we don't have anyone that actually visits the site. It'll just be photos and video evidence uploaded to our system. Our funds control analysts will review that, and as soon as approval is granted, we could go over wiring you money and keeping your project moving along. So how to submit a draw? So submitting a draw is a very easy process. We ask for a very thorough walkthrough video, preferably narrated. We'd like to hear borrowers talk about their project, and if they're passionate about it, like the cool things that they've done. Even if they're passionate about demo, we want to hear about that. So having a cool narrated walkthrough video is fantastic. We also accept photos too. Both's even better. But any and everything to show us where you're at in the project in concurrence with where your draw schedule's at. So we'll send a draw form when you're ready to provide all of that media, and you could go ahead and input exactly what you're requesting for. And of course, we'll review that draw form in accordance with that draw schedule. And the funds control analysts will send you approval or not of that draw. If it's not been approved and there might be some more items needed, they'll go ahead and give you that high sign. However, if it is approved and it's ready to go, then we go ahead and forward that request to the lender, and funds are transferred within those 3 to 5 business days.
So now that we understand the overall process and what it looks like to go through the draw process, I want to go over a few recently funded loans. So the first being fix and flip. This is a super cool scenario because we were able to close this loan in 2 days. I had a borrower call me frantically, needing financing at the very last minute, and we were able to come through for him in 2 business days. So of course, that's an extreme example. We would love, more time. The more time, the better for everyone, less stress for everyone. However, we've talked about a 7 to 10 day average time frame. If you have a deal that needs to close a little bit quicker than that, we can likely accommodate. Nonetheless, in this case, this was a loan in Morristown, Indiana. The purchase price was $75,000. We lent $72,500. However, we didn't release that whole $72,500 at closing. We released 90% of the purchase, so we released $67,500, and then the borrower has a small $5,000, reserve sitting in escrow to be drawn on at some point in the project. He wanted to, work on the renovation and finance the renovation by himself, and so in this case, we were able to help him purchase the property. The next recently funded loan is a new construction deal. We funded this one in 9 days, right? So super quick time frame. We were able to get this borrower 100% of his construction costs, right? So you'll see that the construction budget is $255,000. We were able to lend the entire $255,000. We released to 0 at closing, right? So everything we do is in a reimbursement style fashion. So this helped get the borrower construction financing, and then he's now tasked with getting the slab poured or doing whatever his first phase is in order to start drawing on some of that money. So I have the draw schedule listed here. The first draw is going to be $55,000 and then $65,000, and it kind of tiers down from there. So another great example of a new construction loan that we were able to help a client with recently. And then lastly, here I have a recently funded DSCR loan. So you'll see this one was actually pretty high leverage. The loan amount was $104,000 versus a $130,000 appraisal price. So I think, without having a calculator, it was somewhere around 80% loan to value. We were able to get him a really good interest rate at 7.04%, and this was on a long-term 30-year fixed. DSCR is kind of new for us because we now have a third-party partner in providing DSCR financing. So unlike the rest of the programs that we've gone over tonight, the DSCR loan is not necessarily a balance sheet loan for us. And so there are some additional hurdles to jump through. However, when it comes to customer service and really going to bat for you and getting everything done in a timely fashion, we definitely can come through, and we're excited to launch this DSCR program and help more people out with refinancing or just straight up purchasing and going into a long-term loan.
All right, so we all love FAQs, right? Everyone's seen an FAQ section where they definitely saw things that they were curious of in that section. And we get a lot frequently, usually always the same. I like the unique ones, but I don't get tired of answering these either. So as far as our most frequently asked questions, Stephanie, I want to keep my fix and flip as a rental. Decided I don't want to sell it. I'm going to keep it. Can Marshall Reddick help me refinance? The answer is yes. Of course, we can help you refinance. Any of our loan products can be useful in helping you refinance out of that deal. That could be the DSCR program that we're introducing. That could be a bridge loan program. It all varies, but we're more than happy to work with you again on that new takeout loan. If you were planning to sell before, you don't get dinged or marked because now you're going into a new loan. That's actually perfectly fine for us. Exit strategies change all the time, and we'll be more than happy to help you with that new loan and seeing where it goes. As far as who do we work with, loan brokers are definitely, it's really big lead source, and it's a brand new thing for us. But we've only seen in the past, I would say 18 to 24 months, more and more loan brokers who are interested in Marshall Reddick products. I work with quite a few. I really welcome loan brokers. They have fantastic deals, fantastic connections, and I'm willing to share the same. So if you're a loan broker or if you know other loan brokers, I'd be more than happy to be introduced to them. Where does Marshall Reddick get money to originate these loans? So Marshall Reddick is operating on two different sources of capital. We have many private capital partners that choose to directly fund these loans with their own cash, whether from their bank account, their retirement account, or a family trust, or a LLC. A lot of borrowers will utilize Marshall Reddick loans as an investment for a return on their money. Marshall Reddick also operates an investment fund, as Stephanie mentioned at the beginning of this presentation. The investment fund is just the pooled model of all of those direct investors who want a more passive approach. They don't get fixie-choosy with their loans, so they want to invest in our fund. And Marshall Reddick Fund Management then decides which loans to fund. So we have a substantial amount of capital because we have those two sources, and it's one of the primary reasons we're able to act so quickly and so reliably on a regular basis. Now, do we have a referral program? Good news for y'all, we do have a referral program, and I know you're already getting a discount at the end of this presentation, but if you're looking for a further discount, if you send us referrals your way, we're more than happy to offer further discount. So referral programs, new in itself, I mean, new in definition, but it's always been there. If you share referrals with us and they do good business and we like the types of deals that they're doing, we're more than happy to compensate you through our own profits that we make for these loan fees and etc. But yeah, we love our referrals. All my business has been based on referrals. So it really hits home to celebrate the referrals and the referees that we have coming through our door.
Before I move on to the promo code, I want to answer a couple questions that are popping up in the chat. One of which is, can you explain more about how interest only with balloon works? So how a balloon loan works with interest only is, if you borrow $100,000, at least with Marshall Reddick and our loans, you're going to be paying interest on a monthly basis. So let's say, the interest payment ends up being $1,000 a month. Your monthly payment is going to be $1,000 a month throughout the life of the loan. And then when you go to actually pay off the loan, whether that's selling the property or refinancing, or maybe you're just simply writing a check to pay it off, you will only owe the principal balance left. So you borrowed $100,000, you paid interest throughout the life of the loan or the term, and then you're paying back the $100,000 that you originally borrowed.
And I might add, despite our loans being interest only, it's not a requirement. you're always allowed and welcome to pay down your principal throughout the loan if that's what you want to do. I see borrowers do that often, and usually comes at an advantage for them. So that's something that's, that definitely in the playbook, but interest only is the only minimum requirement that we have.
Another question we've gotten was, does DSCR just mean it's long-term? DSCR loans are generally long-term. What DSCR stands for is debt servicing coverage ratio. And so essentially what it is the income that you're producing from the property through a long-term tenant has to cover a percentage of the monthly PITI payment, right? So if going back to the bridge program that we talked about earlier, if we're talking about a 1.0 DSCR, that just simply means that the monthly rent has to cover the monthly debt service.
Mm-hmm.
All righty, what we've all been waiting for, the promo code. So like we mentioned, would love to give a promo code out to everyone who attended this presentation. Feel free to use Effortless as the promo code for a discount on your first transaction or next transaction if you're already a borrower with us. You can use that for a 0.5 point off your first transaction. Give us a try, you will not be disappointed. I have so many different borrowers who were using other lenders, and all it took was doing one deal with us, and they moved everything over just because our process truly is very simplified. It's super quick. The customer service goes a long way, and we take transparency seriously. So like Levi mentioned earlier, we're not going to string you along and then change terms or maybe close or maybe not close. Like if it's a deal that we're just not feeling comfortable with, we're going to tell you as soon as you put in your loan application. We're not going to string you along and just hope that we get it done or hope that we're going to get it done on time. We're going to be transparent with you. We see you as a partner. We don't want to just work with you on one deal. We want to work with you, on all deals in the future. So excited to give Effortless out as a promo code and hope that everyone on this call utilizes it.
So I get a 0.5 point off my next transaction
sure, Levi.
too? Okay, great, awesome, wow. I'll fill that exit survey.
You get a whole point.
Alrighty, y'all. So please feel free, following the close of this, there's an exit survey. Please let us know your thoughts. Did you celebrate this webinar? Did you get all the information you wanted? And remember, you all have our contact information. So if you guys want to reach out to us directly via email, phone call, then please feel free to. Again, my name is Levi Mendoza.
Stephanie Miller. I'm so happy that everyone attended the call tonight. Please don't hesitate to reach out. Our email and personal cell phones are here for you guys to utilize whenever you have questions or a deal that you want to run by us. So hope to talk to everyone soon and hope everyone has a great night.
Good night, everybody. Bye.